Hey guys, it's John from Bite Size VC, where we discuss and demystify venture capital from an entrepreneur's perspective. It's almost impossible to miss Snapchat's IPO, their initial public offering, and I thought this would be a perfect time to talk and give one example of my previous lesson, which was on economics and control, because really this is again, a perfect example of those two properties and principles in a term sheet that make a huge difference. Now there's a lot that I could talk about in terms of the Snap IPO, how Bobby Murphy and Evan Spiegel have become multi-billionaires, and the financiers and venture partners who have been involved in the round from the very beginning are also incredibly wealthy, and all of that stuff. And even I could talk about some of the technology and the platform itself, but I don't want to talk about that. I want to talk about one of the first term sheets that Evan and Bobby got from Lightspeed Venture Partners and Jeremy Liu, and how that is a perfect example of the two principles again, which is economics and control as it relates to your startup and its potential future outcomes. Quick side note, I'm not an active Snapchat user, so this is neither endorsement for the technology or the service or anyone else involved. It is just a very great example of those two principles. So FYI, I'm 34, I'm really not sure how to use that technology. I probably need to check it out, maybe. Okay, so back in 2012, Jeremy Liu encountered Evan through a bunch of different circumstances, which are not as important as a conversation they had, and Jeremy's initial investment of $485,000 into Snapchat, which is now worth in excess of over $1.5 billion. An incredible return, an incredible multiple on their initial investment. Now all of this is coming now to light because they were a private company and now they're a public company. And so as a public company, as they toured and tried to attract interest and generate buzz around the initial public offering, they had to obviously disclose some of their previous contracts and transactions. And if you didn't know that, now you've learned something, and now you should subscribe to this channel. Now to be certain, they participated in follow-up rounds. And so I believe the aggregate sum total of their investment was about 8.5 million, but still 8.5 million, and then 5-6 years is now worth 1.5 billion and climbing. Unbelievable. So hats off, kudos to them, etc., etc. But you see, this is where it gets really interesting, is when Jeremy and Bobby and Evan met and they were beginning to discuss that first term sheet, the terms, the rules of engagement around economics and control. Jeremy put in some terms in the initial term sheet which were a little bit onerous, which were a little bit, you know, some critics have called this pretty backhanded or evil. I've seen some people use that term. I'm not here to judge, but the terms essentially created a lot of control. Specifically, in the term sheet, the initial term sheet that Jeremy from Lightspeed Venture Partners presented to Bobby and Evan was, I can essentially veto, I can say no, I can reject any other interested parties in financing this project from here on out. I have voting control around additional capital to come in, which is obviously super important. And regardless of whether Bobby or Evan knew at the time that these terms were not so cool or not founder friendly, they signed those terms. And so it's a little bit difficult to judge again, because at the end of the day, 5-6 years later, like, everyone's super happy, and if financial outcomes were your only metric for success, they've hit it on all accounts. But what has happened though, of course, was there was a rift that was created because those terms weren't cool. Because as they wanted to raise venture capital, more venture capital for their project as they needed it to scale, Jeremy and Lightspeed Venture Partners, they got in the way. They were contractually in control. Remember, economics and control. They're contractually in control with future rounds. Fast forward, Bobby and Evan decided to redo that. Their next rounds is always an opportunity to redo the contractual obligations and the economics and control. And in subsequent rounds, they were able to negotiate with Jeremy and Lightspeed Venture Partners and say, hey, those weren't founder-friendly terms. We don't like that. We're gonna reconfigure it. And they came to some sort of agreement, and the rest is history. But the reason this is so important is that term sheet established the culture around financing for the rest of the history of that project, and now, of course, public company. It fundamentally shifted economies and returns of scale. Just imagine if they, like, every point of this company now, every equity point of this company now is worth tens of millions of dollars, which can change thousands of people's lives. And of course, the people at the top end, like, they're all fine, but every percentage point matters, and it matters a lot. So here are a couple things that we can learn from this particular example. The first is, when you get a term sheet from someone, regardless of how much you know about term sheets and venture capital, get a second opinion. Get a trusted second legal opinion from an expert to say, hey, I need you to review these. It feels good, it reads good, but I just need another opinion because my emotions might be in the way, I might be blind for whatever reason. I just need another opinion. Second thing, you want to work with venture partners as an entrepreneur. Remember, we're speaking from an entrepreneur's perspective. You want to work with venture partners who create founder-friendly terms. Now again, if this is your first venture, it's going to be hard to know that, but that's why you go back to number one, is get help, get advice, get counsel from those you trust, people who have done this before. Third thing, as I've been thinking about this deal term, is I would have asked for more time. Now, according to the records and according to some of the disclosures, they turned this deal around in about 2 weeks. That's super fast. And of course, everyone wants a super fast turnaround when it comes to term sheets and financing, because you want to get back to building the business. You want to get back to building product. You want to get back to working on the company, et cetera, et cetera. And financing is such a pain and gets in the way. But in that 2-week period, that's where Bobby and Evan gave all of that control over. And they changed the economics as well. And so, there was a mistake that was made. And so I think that's a good litmus test as you work with venture partners, as you work with people who have money, as you work to get your first raises. At any point in time that you feel uncomfortable, it's okay for you to say, hey, can we take the foot off the pedal for a second? Can we take a step back? I need a little bit more time to do my diligence, to do my research, to get my counsel, to get my advice lined up. I love the terms. Thank you so much. Be super grateful that someone gave you a term sheet. And remember, term sheets are not an obligation. They're not set in stone. People can walk away from term sheets, even if you sign them. It's a good litmus test. If you feel unfair or undue pressure from a financier, a venture partner, a VC, walk away. That person is interested, for whatever reason, in getting the deal done and not considering you as the entrepreneur in the business. There are enough venture partners, enough venture capitalists out there who are founder friendly, who will be willing to move a little bit slower so that you can catch up. Your knowledge and understanding and wisdom around the deal and the term can be complete. So hopefully that's helpful. Again, congratulations to the Snap team and Lightspeed and everyone else involved in the IPO. Incredible outcomes for everyone, but a very powerful lesson and real life lesson on what it means for a term sheet around economics, and the two principles, economics and control. This is John from Bite Size VC. Hope you guys have a great day. If you guys want more of this, subscribe to this channel. I talk about what it means to be a I talk about what it means to be a software developer and entrepreneur here in Silicon Valley and San Francisco. Would love for you to follow along with my journey as I try to build a company here and maybe, just maybe, have some crazy outcome like Snap. That would be cool. All right, guys, have a great one.